Hi, I'm Bruce Brumberg. I'm Editor-in-Chief of MyStockOptions.com. I'm going to briefly show and tell you about the new tax reporting rules that apply when you sell shares you receive from stock compensation or an employee stock purchase plan. My goal is to help you understand the new rules to prevent tax return mistakes and overpaying your taxes. Let's take a look at what's new. First, we have this expanded 1099-B that you get from your broker and the IRS gets it too. What's most important about it is it now includes the cost basis information. However, that number may be wrong, or may be too low, or may be blank. Then you take all this expanded information and you put it on the new Form 8949, and that goes along with a greatly shortened revised Schedule D that you file whenever you sell stock. The cost basis is that all-important number that you subtract from your proceeds to determine your gain or loss. Now, there's three situations where you could face what I call cost basis confusion and potentially overpay your taxes. The first is for stock that's purchased before 2011. That's considered a non-covered security, and the cost basis information does not need to appear on the 1099-B that goes to the IRS. The second situation, also a non-covered security, is any stock you sold that you did not purchase for cash, and that happens with most restricted stock or restricted stock units that you have, and also for performance shares. And again, no cost basis needs to be reported on the Form 1099-B. And the third situation is where you're selling stock and the W-2 income from stock compensation, such as from a stock option exercise or from an ESPP purchase, is not appearing as part of your cost basis because it's not required. And you have to know how to make an adjustment in that situation in the cost basis. So to avoid overpaying your taxes, you have to understand these three situations where you may face cost basis confusion. The Form 8949 is where you put all the details that used to put on the Schedule D. They go on this form now. In fact, I'd like to think of it as the new Schedule D. There's different versions of the form for whether you have long-term or short-term sales, and also you want to be checking a box at the top depending on whether the IRS got the 1099-B or not, and whether that included the cost basis or not. Then there's columns where you report the details of each sale, and then there's that all-important column for the cost basis, where again the information on the 1099-B could be wrong, it could be too low, or could be blank, and you need to know what to do on the 8949 for these different situations. Here we have the all-important Form 8949, where you're putting the details of each transaction. The current version of the form is somewhat similar to last year. There is a shifting of some of the columns, and there's also a new column H, where you're putting the total gain or loss for each transaction you report. Now, column E is where you put the all-important cost basis information that you're getting from your broker, and you're looking at whether it was reported or not to the IRS, because that impacts how you're going to report the sale on the Form 8949. Now, column G is where you make an adjustment in the gain or loss that was reported to the IRS. And column F is where you put a code that explains the reason for the adjustment. Let's say the stock compensation was left off, then the code that's going to be used is the column B. So let's look at an example. You have 1,000 shares of stock that you sold. They came from a stock option exercise where the exercise price was $10 a share, but the market price at the time was $12 a share. So in that case, the real cost basis for that would be $12,000. However, the 1099-B that you received and the information reported to the IRS just lists a $10,000 cost basis. So you want to make an adjustment in that so you're not reporting a gain which is too high and paying too much taxes on it. Now, you should have a $2,000 adjustment in your gain or loss, and that would be in parentheses as it's reducing the gain, and then you want to put in that column F, code B, for the adjustment in the basis. Now, let's say instead the 1099-B that went to you and to the IRS had the correct basis of $12,000. In that case, you just put that in column E, and column F and G are left blank. Now, since this is an example of where the IRS did get the cost basis information, you're also checking box A on the Form 8949. Let's say instead you had an example where the cost basis was blank. And that could happen if it's an uncovered security like restricted stock or a stock option exercise or ESPP purchase that happened before 2011. In that case, what the IRS gets is nothing for the cost basis. You check box B and you put the correct basis, the full basis, in column E and nothing in column F and G. So let's review the three most common situations dealing with reporting on Form 8949 based on what appears on the 1099-B. The first is the basis is just right, meaning the basis that was reported to the IRS. In that case, you just take that number from the 1099-B and you put it in column E on the Form 8949. Let's look at the second situation, and that's where the basis is too low. And this is where the reporting is most complicated. Again, the basis is going to be too low because the W-2 income, the stock compensation element from your equity compensation, whether it be an ESPP purchase or a stock option exercise, is not included in the basis that's reported to the IRS, and it's not required to be reported by your broker, but you have to report it correctly on that Form 8949 or your taxes are going to be too high. So you take that number that's from the 1099-B and you put it in column E. Then you go ahead and you make that adjustment in column G. It's an adjustment in the gain and it's going to be in parentheses for a negative number. And then the third step is in column F, you put code B. That's the code that's used to explain the reason for the adjustment. The third situation is where the cost basis is blank. And that's going to happen with what is called a non-covered security. So this would be stock sales from an restricted stock, a restricted stock unit, or performance share vesting, or from an ESPP purchase or stock option exercise that happened before 2011. Now you have to go ahead and actually put the correct basis in column E, including any W-2 income. There's no adjustment that's made in column G and no code in column F. The Schedule D is somewhat similar to last year, but very different from the years before, where Schedule D used to put all the details of the transaction. Now Schedule D is just a place where you're aggregating together the totals from Form 8949. For more information, insights, and guidance on tax topics, you want to look in the Tax Center on MyStockOptions.com. You'll find illustrated, annotated versions of the key tax forms, along with articles from leading experts. If your company or stock plan service provider is licensing MyStockOptions.com content, you want to look in the Tax Center, which is part of the Knowledge Center.